Hello, everyone. It's great to be back. And thank you for always being here. How is everyone doing? I trust you're all keeping well. Last time we looked into fraud, how to prevent fraud, especially when it comes to employee fraud. And I'm sure you learned a lot. If you were not here for the last class, please check the last video. So today we're going to be looking at the books of accounts you need to keep to ensure that employee fraud does not happen in your business, okay? So that you can block every loophole that there may be for anyone to take advantage of your business. So let's delve in. Remember, your road to profit starts here. Good evening, everyone. Welcome to this class. I'm going to be showing you some basic things that will help you to know how to keep basic accounts. Okay, so today we're going to be looking at what books of accounts are most important for the prevention of employee fraud. Okay, so our very first book is the cash book. I'm sure a lot of us in business are familiar with the cash book. Cash book is for recording all cash transactions, whether receipts, payments, and the likes, anything that goes out of the business by means of cash, right? Cash was paid for it. So it goes into the cash book. Here you can see the date, January 1, receipt, what was received in $1,000, payment of 500 was made. They had a balance of 500 in the cash book. Like that, you see the 2nd of January, $2,000 came in, $1,000 of payment was made, and they had a balance in cash book. Remember, they had an opening balance before on the first transaction, which was 500. Now they have another balance of 1,000. So both together will give them 1,500. And you could see the last one, you had 500 received, 2,000 was spent. That means the 1,500 that was in the account previously, plus the 500 receipt that was received, and they spent everything, giving them a zero balance on the cash book. So the cash book is very, very easy. It is one of those accounts that helps you to detect unauthorized transactions. One of the things that you should also have in your cash book is description of whatever it is that the money was spent on, right? Very, very important. So we're going to be looking into the next book. The next book that we're looking at today is the General Ledger. Now, the General Ledger provides for you a comprehensive view of all your financial transactions, including your accounts payable, your receivables, your payroll, name it. Everything is in the ledger. So analyzing your ledger will help the business to have an overview of everything that happened in the business. And before the ledger is analyzed, looking at it, just going through the ledger can give you an overview of everything that the business has done, what came in, what went out, and all of that, what's yet to be received, what is bought on credit, what was paid to staff, everything is in the general ledger. And, reviewing your general ledger from time to time can help you identify discrepancies and irregularities. We'll be moving on to the next book. The next book is Accounts Payable Ledger. This is records of your suppliers, your vendors, those you buy things from, those you buy supplies from, those you buy your stock from, and things like that. You verify invoices. It helps you. You're able to verify the invoices if they match with what is on the accounts payable ledger. It also helps prevent fraud, because if you're looking at it and then the invoice does not match with what is on the ledger, there's no correlation. That gives you an indication that something has happened. And one thing about employees is that when they notice that, either there's an auditor that is checking the books or the owner of the business is checking the books and noting these things and saying, why is this like this? Why is that like that? It serves as a deterrent of some sort. The fact that, questions are going to be asked will make them want to check themselves, not to pilfer or add anything to what's supposed to be paid out so that they could get their kickbacks or whatnot, because that can happen in the case of accounts payable when they have connived with the vendors or the suppliers. All right, so we're going to the next book. The accounts receivable. This is where you receive all monies that are due the business. Maybe someone bought something on credit and is yet to pay. You have the list of accounts receivable. In this account, you have to be very careful because employees can actually sell products, collect cash, pocket it, and tell the owner of the business that this particular customer has not paid. One of the things that the account receivable will do for you is that you have records of all your customers who are yet to pay. You can put a call through, right? You check all their receipts and put a call through to them to know, okay, has payment been made and all of that. So when you monitor it, when you check it and employees know that this is going to be checked, when employees know that this is going to be checked, it's going to prevent them from wanting to take advantage of this by making sales and not delivering the money to the business. All right, so we'll move on to the next. We're looking at the payroll ledger. This is one of the most important ledgers that you can keep in your business. This is the ledger that records all employees' salaries, wages, benefits, allowances, and things like that. Regularly reviewing this account will help you prevent payroll fraud, which happens quite a lot, especially if you have a large establishment where ghost workers can easily be paid without the owner of the business really knowing what's going on, right? So there are cases that we've seen where names of employees that have already left the business were kept on the payroll and they were still being paid, right? But the monies were going into a different account, not the account of the employee that left the business. Also, overpayments can happen. Let's say, for instance, somebody took a salary advance, for instance, and the advance is not taken out of the salary before payment is made, right? So in cases like that, you can have overpayment for a particular staff, at a point in time. But if this is being reviewed from time to time and requests that have been made as well are being recorded in the payroll as at when due, right? It will be easy to know, oh, this has happened and that has happened, and you will know how to forestall fraud from happening in that area. Now, let's look at the next book of accounts. We're looking at the journal. Now we have what we call journal entries in accounting. I don't want to bore you with this, but this is one of the major ways that we are able to adjust for errors in accounting. Journals help us to identify suspicious transactions and accounting irregularities, because when you look at your journal, journals carry two entries. You have the debit side and the credit side of the journal entries, where you have, let's look at this example, for instance. Let's say you made sales to Mr. John of $100,000, for instance, and Mr. John pays that $100,000. Your journal entries for that transaction will be sales, right? Sales is going to be credited with 100,000, and then the bank, if he's paying maybe via bank transfer or deposit, the bank will now be debited with that same amount, increasing the bank balance. If it's the cash, if it is paying in cash, then the cash book will increase by that amount, by that 100,000. So there are two sides to the journal entries. You have the credit side and you have the debit sides. All right, so let's move to the next. The bank reconciliation statement is one of the most important books, right? It is the seventh book that we'll be looking at today. So it helps basically to verify the accuracy of cash transactions by reconciling the company's cash book with the bank statement. After this reconciliation, you have the same balance in your cash book and in your bank statement, right? So that shows that every money that came in was properly accounted for and there are no losses, no pilfering. If this is done accurately, it's one of the major ways you can know whether there are discrepancies in your books, and you are able to track it, you're able to trace it and pinpoint where the error came from, or if there's any fraud involved, you are able to nip it in the board immediately. Okay, so those are the books of accounts that you need to keep in your business. There are softwares we can use to also track these things to make it easier on us, right? But softwares such that it's garbage in, garbage out, is whatever you put in, you're going to get. So if there's no one reviewing, if there's no one checking it, if there's no one letting you know, oh, this is a miss or that, you're going to, at the end of the day, still come down to the same thing, right? Softwares don't work by themselves. They are manned by people, right? So regularly reviewing and analyzing these books of accounts can help detect and prevent employee fraud. Additionally, implementing internal controls such as segregation of duties and authorization procedures can further reduce the risk of fraud in your business. And in our next video, we will be looking at this. So this is going to give you a deeper view into how you can further protect your business from fraud. All right. I hope you had a great time today learning more about how you can prevent your business from employee fraud and any kind of fraud for that matter. Remember, accurate books lead to higher profits. See you again next time.